It's the cycles. Stupid. Why the news didn't move Bitcoin. Quick note before we start. Nothing on this channel is financial advice. I'm an analyst and a builder. MANTIS is a cycle analysis tool. What you do with that information is entirely your decision. Crypto Twitter has made its call. The bottom is in. The bear market is over. Big accounts, verified, credentialed with charts to match, calling for a new all-time high before the end of 2026. The ETF inflows are real. The momentum is real. The narrative is confident. Here is our position. The narrative doesn't move the framework, not because those accounts are necessarily wrong. They might be right, but the cycle was already pointing exactly where it is pointing before any of those posts were written, and it will still be pointing there after the next one lands. This video is about why most people have the relationship between news and price backwards. The conventional model is this. Something happens in the world, markets react, price moves. The event is the cause, the price move is the effect. Simple, logical, wrong. The cycle model inverts it. Price is already moving, driven by the repeating, measurable rhythm that has shown up consistently across 15 years of Bitcoin data. The news arrives after the fact, providing a story that explains a move that was already underway. The narrative is not the driver, it is the passenger, arriving to explain a journey it had no part in planning. This is not a fringe idea. It is what 15 years of Bitcoin price data actually shows when you apply a consistent framework to it. The cycle keeps running, the narratives keep changing, the destination keeps being the same. Let's look at the record. The tariff tantrum. Bitcoin dropped sharply. Crypto Twitter explains the move, geopolitical risk-off sentiment, the correlation with equities. The tariffs caused the sell-off. Except Mantis was already projecting a lower low before the first headline was written. The cycle was already in its declining phase. The tariffs didn't cause the move. They dressed it, the quantum threat. Google announces a breakthrough. Private keys are at risk, Bitcoin is vulnerable, the price reacts, CT panics, except the quantum threat has been called the Bitcoin killer multiple times now. Same narrative, different year, and each time it arrived precisely when the cycle said price should be falling. The quantum computers didn't move the market, the cycle did. The headline just showed up to take the credit. The yen carry trade unwind, a macro liquidity event, risk assets sell off, Bitcoin follows. The explanation writes itself. Global deleveraging, institutional redemptions, forced selling. Except the cycle was already pointing down. The yen carry trade didn't schedule itself around Bitcoin. The cycle low was already in the window. The macro event arrived on cue, as they always do, to explain what was already underway. 3 different narratives, 3 different explanations, one cycle, same destination every time. The news was the costume, the cycle was the body inside it. There is an unofficial indicator that has no formula, no data feed, and no R-squared score. It is called the caps lock indicator. At bear market bottoms, the doom content floods the feed. Full capitals, obituaries. The accounts that were calling $500,000 have gone quiet or changed their tune entirely. The narrative has fully caught up with the move that already happened. After a few green candles, the same thing happens in reverse. Bottom is in. New paradigm. This time is different. Full capitals, maximum confidence. The narrative has fully caught up with the move that already happened. Both extremes are saying the same thing. The crowd is certain, and when the crowd is certain, the cycle is usually close to turning. Right now, the caps lock posts are bullish, big accounts, maximum confidence, the bottom is in, a new all-time high is coming, the caps lock indicator is firing, the cycle is still pointing at a lower low. Those two things are not in conflict. That is exactly how it works. Which brings us back to right now. Big accounts are calling the bottom, verified ticks, large audiences, charts that look compelling. The ETF inflows are cited. The momentum is cited. The macro backdrop is cited. Here is what the data actually shows. Bitcoin spot ETF demand just recorded its weakest month since launch. The inflows are real, but they are a fraction of what drove previous rallies. The narrative says institutional demand is back. The numbers say institutional demand is at a record low. The narrative and the data are not telling the same story, but the narrative is louder, and none of it moves the framework. The cycle is still pointing at a lower low. The window opens in 20 days. The base case has not changed, not because we are ignoring the bullish calls, but because one specific number decides whether the base case holds or breaks $80,600. That is the previous weekly cycle low. If the next low prints above it, the sequence breaks. The bear market structure is invalidated. We say so immediately, publicly, and without qualification. Until that number breaks, the all-time high calls don't move the framework. The ETF headlines don't move the framework. The big accounts don't move the framework. One number, one condition. Everything else is noise arriving on schedule. Understanding this distinction is not just intellectually satisfying, it is practically important. If you believe the narrative drives the price, you will spend every week reacting. Every headline becomes a data point. Every analyst call becomes something to weigh and respond to. You are permanently in reactive mode, anxious, exhausted, and usually a step behind the move that already happened. If you understand that the cycle drives the price and the narrative explains it after the fact, something changes. The headlines stop being urgent. The caps lock posts stop being threatening. The Fed decision stops being something you need to position around. You already know where the cycle is pointing. You already have a framework. You already know the one number that changes the base case. Everything else is just noise arriving on schedule. MANTIS was built for exactly this, not to predict the headlines, to track the cycle underneath them. The tool doesn't know what the narrative will be next week. It doesn't need to. It knows where the cycle is. And right now, the cycle is saying the same thing it has been saying for months: lower, then the window, then the accumulator fires. The narrative will arrive to explain it as it always does. In 1992, James Carville's campaign war room had a sign on the wall, 3 words, a reminder for anyone who started drifting off message. It's the economy, stupid. This channel has its own version. It's the cycles, stupid. Not the Fed, not the tariffs, not the quantum computers, not the geopolitical flashpoints, not the caps lock posts, not the credentialed economists calling zero. The cycle was already running before the first headline was written. It will still be running after the last one. 20 days to the window. The base case is intact. The framework hasn't moved. If you want to run it yourself, MANTIS is available with a free 14-day trial. Link in the description. Step back, set your alerts, let the cycle do the work.